Tackle today, Justice Brothers from Tackle Trading, bringing you all the charts, news, and analysis so you can be informed in your trading decisions really quick. It's been a busy 24 hours of the market. We're going to give a quick recap of it all, look at the technical situations, talk about those silver and GDX breakouts that we have been talking about in our program for a while. You want to be part of that programming, makes you money, and you learn along the way. Nice 1-2 punch. Go to tackletrading.com, sign up for that 15-day free trial. Matt, it's been a busy day in the market. Kind of a doji-esque day in the broad market, with all of the news flow. Let's start with the technicals first.
Looking at the technical condition here, a little bit of slowing momentum over the last couple trading sessions after that gap down due to DeepSeek earlier this week. It's been a recovering environment. And the amazing thing is over the last 3 days, you've had tremendous amount of news coming into the market. You've had a Fed announcement. You obviously had the DeepSeek secondary information coming in and the concern in the semiconductors. You then had Microsoft, Meta, Tesla, all reporting earnings. And yet, over the last 2 days, despite all that information coming into the market, we got two inside candles from Tuesday's candle. If you were to tell me we would have two inside candles following the information that's coming into the market over the last 24 hours, I would have said you're crazy. But here we are. And the simple reality is I think the market has it right so far, because there is still some concern on the semiconductor side of the equation. There is still some concern on technology. And it's not exactly like the central bank yesterday, nor the earnings reports out of Microsoft, Meta, and Tesla were inspiring enough to break the market out of that concern that the market did have following DeepSeek's information. So I look at the market and a volatile path to get to a little bit of a pullback here. But I do think the market has it right over the last couple of days. There wasn't anything that we saw in these earnings reports to really, spark a theme in the market. Now, one of the things that I think was important was to ensure that the CapEx spending was still coming through out of Microsoft and Meta. And that certainly was the case, as, Meta came out with a grand total of 22.6 billion spent in the quarter on CapEx. They talked about in their conference call about the company continuing to invest in the AI infrastructure for Azure. They're looking at that expanding coming into this year. Meta came in before the earnings report and basically suggested 60 to 65 billion in CapEx spending. The ultimate question was that going to be revised due to what was going on with DeepSeek. It didn't seem like there was anything that was stopping Meta from investing further in the AI infrastructure. They're still looking at it at 60 to 65. Now, remember, last quarter, they were expecting to spend 35 to 40 billion in 24. Now they're looking to spend 60 to 65 billion in 25, and they really haven't come off that yet. And so I will say that's a good reprieve that, there wasn't a massive secondary impact on the CapEx side of it. But was there enough to create liftoff here over the last 24, 48 hours from a Fed to these major earnings reports? And from a Fed that was slightly hawkish, in my estimation, to earnings reports out of Microsoft that beat by 3.9%, Tesla missed by 3.9%. I think the market's missing a spark here.
Yeah, no, and when we do the Trading Justice podcast, you've already created the title, Missing a Spark. I already love the Trading Justice podcast title, Missing a Spark, because my take on this is the same, right? It's just, where's that spark? Where's that theme? Where's that driver? We have concerns. Well, I guess that's how you create two inside candles in the midst of such a big news flow, Matt. Other areas of the market, though, we look at the SPY. Pattern development, is play. You highlighted XLY yesterday, RSP today, and so this becomes, as we exit this news flow, a trader's market, picking your spots, doesn't it?
Yeah, and when you're looking at the broad market, the concern on what we were just talking about is macro side, right? Fed slightly hawkish, and I do mean slightly hawkish stance out of the Fed. We'll have a bigger update in the podcast later on this week as we detail kind of the week that was in the Trading Justice podcast later on Saturday. But that's that concern on CapEx and that concern on the earnings reports today. That's more of an aggressive growth storyline, really kind of tied to the AI trade. When you're looking at the rest of the market, how do you look at RSP here and say, oh my goodness, this is bad? No, you're talking about testing a breakout channel that has been a fairly clean breakout channel. RSP, which really kind of represents the cyclical areas of the market, they still look fairly decent. IWM clinging up to that breakout channel at that 50-period moving average, converging against the 230 handle. The diamonds kind of forming up a secondary pattern, sniffing that all-time high. And so when you're looking across the board, the concern that we speak about primarily is in semiconductors and the AI trade in general from a growth perspective. But does that mean it's an entirety, the entire market is having that exact same conversation? And the answer is absolutely not. This is a trader's market, but it does have some pretty interesting sector rotation going on right now as well. Keep in the trade, not in the Trading Justice, but in the Tackle Trading newsletter this weekend on Friday when we release it, we'll have a really big update from a sector perspective as well, because we're certainly seeing improving conditions in a lot of these sectors that are not related to the specific tech area of the market. And so, yeah, Mark, the concern isn't broad based. It's really kind of centered in semiconductors right now. The AI trade, to a certain extent, the AI trade is kind of missing that spark like we talked about. But in general, you look at RSP and you got to like what you see, quite frankly.
Yeah, absolutely. Economic data today, GDP came in below estimations. Jobless claims, though, showed absolutely zero weakness in the labor market. We have labor market data all next week's labor market, but not quite as hot of economy, but still strong jobs market. That's not a terrible 1-2 punch from a yields dollar pressure standpoint, right? That doesn't cause liftoff, but it gives confidence. There is extra emphasis. Powell had a very, we have, all you need is patience type tone yesterday. That will make inflationary data reports carry extra emphasis. We have the core PCE price index tomorrow. We'll talk about it in the tackle today. Matt, in stocks in the news, any thoughts on those before we get to the stocks in the news?
Yeah, we'll have a bigger update in the Trading Justice podcast on the Fed. I'll save my thoughts for then.
All right. What do you got for us on earnings? So yeah,
Yeah,
lots to choose
already
from, bro.
talked about it a little bit here, but the three major stock stories here today are Microsoft, Tesla, and Meta. I'll talk about obviously other stocks that are impacting the market. Lam Research, I felt, had a really good standout report coming from a lower point. We'll cover that in the Traders Lounge later on today with Coach Greg. But for Microsoft, Meta, and Tesla, the three Mag 7 stocks reporting here today, Microsoft, and again, I think the lack of inspiration on these reports is what I kind of feel. Microsoft came in at 323, expectation was 311. That's a beat by 3.9%, which is less than what the average market beat is. And think about that. I just want you to think about finance right now. Now, finance came from a lower point last year to a higher point this year, so it's not a fair apples to apples comparison. But when you're looking at finance, they utterly destroyed EPS expectations. Blended growth out of EPS on finance was 49%. Microsoft, you're a growth company, a stalwart company, a great company. I'm not saying anything negative on that side, but you got to beat by better than 3.9% to inspire anybody to start picking up your premium valuation stock. And so this is just not a very good beat out of Microsoft. You also had on the revenue side up 12%, which is okay, but when you're talking about cloud up 19, that's not going to get the job done from a growth perspective. And so just kind of a walk in the park type numbers here. 3.9% beats across the board, slight beats here, slight misses there on their different segments, but 19% on the cloud I didn't feel was a very good number out of Microsoft. Now, Microsoft is rewarding the investor class quite aggressively. They did award them quite a bit in 24, expect to in 25 as well. But the paltry beats and the lack of growth initiatives coming out of Microsoft and the lack of quality, AI type spending information or secondary announcements here, the path of least resistance was down. Microsoft gaps down into support. I think the market's got this one right as well. The report itself is not exactly a inspiration, I would say, here today. Slight beats, but you got to do better than that when you're a premium stock with high valuation.
Yeah, this market smells like rotation, like Nirvana smelled Teen Spirit. That's for
It's
sure.
very true. Now, I don't know if it's going to be rotating on the meta because the meta was one of the standouts here today, and you got to take into account meta not just on the report here today, but the news of capex spending 60 to 65 billion that came out last week. That was an increase over the 40 billion that they were looking to spend in 24. My ultimate question coming into Meta's report was whether or not they were going to come off that due to the deep seek. They're not. They're doubling down, and that's very good news when you're looking at the AI trade in general. But when you're looking at Meta as well, Meta's looking to spend about 60 to 65 billion in capex in 2025. That's obviously a sizable increase from last year. Meta also came in with a really impressive beat, 20% beat against expectation. EPS came in at 802. That is a whopper of a number. Think about the last four quarters here. 535, 471, 516, 603. Hey guys, 2 months later, 802. That is a whopper of a number. Meta was a standout. So out of all the three we're going to be talking about, Meta was the Blue Ribbon Award winner, no doubt about that. Gapped up, a little bit of overextension here. Secondary pattern watch would be warranted for most traders post earnings analysis. And then finally, Tesla trying to cling on to that 50 period moving average of support as they come in with the paltry miss of 3.9%. Revenue fell short of expectations as well. That's on the negative side. On the positive side, so what they actually did, Mark, was negative. What they're going to talk about doing is positive. And so that's kind of where we're at on this Tesla story. So misses on the raw numbers, but promises for full commitment to AI and FSD, highlighting 400% increase in AI training computer in 24. Tesla also reported that FSD is getting closer and closer. And so FSD is the growth story for Tesla. It is the end all be all growth story for Tesla. That's why people invest at this point in Tesla is for, well, not just FSD, but for many initiatives that FSD will allow Tesla to embrace from an automation perspective. And so a little bit of a negative on what did they actually do in the quarter, a little bit of a positive on what they will be doing in the future. And so you try to parse that the best you can there, Mark.
Yeah, absolutely. Listen, you specifically yesterday in the Traders Lounge and multiple coaches on the picks talked about silver, the breakout there. I know you want to start the dollar. Screw that. I want to look at GDX and silver. Those are the stories and commodities on a Thursday morning.
Yeah, we got the silver breakout. Anybody that
We've been calling this for 2 weeks plus, and
oh yeah, we've been
umping the
talking about it fairly aggressively in the Traders Lounge as well. We spent a good 10 minutes on silver yesterday talking about front running or what works here on order entry and whatnot. So it is good to see silver gapping up and testing that overhead at 29. Silver on a gap up looks like confirmation. If you miss that gap up, you're going to be looking at any secondary pattern there. You pulled up GDX. GDX is the gold miners, and they look beautiful as well with their break and run as well. The miners look fantastic. Silver looks fantastic. Gold breaking into an all-time high. Gold looks fantastic here today. Gold testing that all-time high on the futures mark. The wick got into that all-time high. We're having a commodity precious metal, industrial metal moment. And if you want to learn more about that, well, I promise you, there's nobody that anchors on commodity analysis like we do at Tackle Trading. So come check it out.
Yeah, absolutely. Listen, come to that Traders Lounge. It will make you money. It will get you educated. That's a pretty good 1-2 punch. TackleTrading.com. Sign up for that 15-day free trial today.